Welcome to the deep dive. Today, we're really getting into a single source you shared with us. It's an article, and it's got this pretty bold title, Fear of Investing. Let's fix that.
Right. And our mission here, our goal for this deep dive, isn't just to read it back at you.
No, definitely not.
It's more about, cutting through everything else and finding the core ideas. What really stands out in this piece? What are the important nuggets?
Exactly. We want to figure out what truly matters here for you, the listener.
And this source, well, it covers a lot of ground. It's looking at psychological stuff like fear, but also practical money management, finding new ways to earn.
Different kinds of investments, and it even pulls in lessons from some unexpected places, like a documentary about the financial crisis.
Yeah, and believe it or not, even a super famous dog's Instagram account. Seriously.
Okay, that mix definitely sounds interesting. So you've brought the material. Let's unpack it together. We're here to guide you through it, pull out those key insights.
Great. Let's jump right in. So the source kicks things off by tackling what it sees as a really major hurdle for lots of people trying to build wealth.
And that hurdle, according to this article, is the fear of investing. Simple as that, apparently. It really frames this as the main barrier.
It does. The article really emphasizes that getting past this fear is, well, foundational. It mentions something about 5 actionable tips for confidence.
Which aren't actually detailed in the text we have, right?
Correct. We don't have the specific tips here, but the core insight is clear. The source is saying the psychological barrier, the fear itself, that's the first domino you need to knock over.
Makes sense.
Because without dealing with that, all the other strategies, they're kind of hard to put into practice. The main point seems to be that inertia, that fear, stops people cold. So overcoming that specific feeling is step 1.
Yeah, you can know what to do, but if you're too scared to actually do it, then what's the point? Okay, so once someone starts working on that fear, what's next? Where does the source point them?
It moves into something very practical, spending habits. And here, the source makes a really clear distinction. It contrasts impulse buying with something it calls intentional spending.
Okay, so it's not just, stop buying coffee kind of advice.
Exactly. It's presented as being more about control and purpose. The source suggests that the effective strategies aren't just about restriction, but about making sure your spending, well, serves a conscious goal.
Right, like turning spending from just money going out into something active, something that fits your bigger financial goals.
Precisely, spending with purpose. Now, after that, the source brings up a topic that, well, often makes people a bit nervous.
Debt. Yeah, most of us hear debt and just think bad.
And look, a lot of consumer debt is bad. It's a drag for sure. But the source specifically talks about the good kind of debt.
Okay.
And this is where the distinction is key. The insight, as presented here, is that certain kinds of debt, if you manage them smartly, can actually be used as leverage. The source even suggests this can potentially transform liabilities into powerful tools for building wealth.
So using borrowed money to maybe make more money or buy an asset that grows.
That's the idea presented, using it to generate value or income that hopefully outweighs the cost of borrowing itself, not just, funding stuff that loses value or everyday spending.
Interesting. Seeing debt as a potential tool, not just this weight around your neck. Okay, so beyond managing money and maybe using debt strategically, the source also talks about bringing more money in, right? Generating income.
Yes, specifically by turning a hobby into a profitable gig, which feels very relevant right now with the whole creator economy and side hustles booming.
Definitely.
The source frames it as turning your passion into profit. And the insight isn't just, hey, you could do this. It mentions practical steps, which implies it's something you can actually plan and execute, not just hope for.
So treating your interests, your skills as potential assets, that's quite encouraging.
It is. And then the source shifts again, looking at another investment area that often feels, well, pretty out of reach for regular folks. Investing in real estate. But crucially, without needing like a huge pile of cash up front.
Yeah. Real estate usually means big down payments, right?
Traditionally, yes. Very capital intensive. But the source highlights real estate crowdfunding. It calls it an innovative way to access property investments without traditional ownership.
Okay, so crowdfunding, like pooling money with other people.
Exactly. The core idea here is that technology and these new platforms are opening up asset classes that used to be pretty exclusive. Through crowdfunding, you can get exposure to the real estate market with, way less money than buying a whole property yourself.
Right. Makes sense. Okay, let's switch gears a bit because the source does. It has this section called Rich Reads, and it focuses on a documentary called Inside Job. This definitely moves away from personal strategies and looks at the bigger picture, the financial system itself.
It does. The source uses this documentary to explore the environment we're all operating in financially. And its summary of the film's big idea is, well, it's pretty stark. It talks about a web of corruption, greed, and unethical decisions causing the 2008 crisis.
Strong words.
Very. It specifically mentions deregulation and corporate greed. The source claims the film reveals how powerful players manipulated the system to their benefit, all while ordinary people paid the price.
Now, it's really important we stress this. That summary, that perspective on the documentary, that's coming directly from the source material we're discussing. We're reflecting how it presents the film.
Absolutely. Critical point.
Yeah.
We're reporting on the source's viewpoint here. And the source's Why It Matters section ties right into that. It basically says, if you thought the crash was just, bad luck.
Think again.
Exactly. The source says the documentary, as it presents it, suggests you think again. It was orchestrated by people at the highest levels.
Wow. That's quite an interpretation laid out in the source. And what action step does it suggest based on that view?
It connects the big picture back to the individual. It says, demand accountability and make informed financial choices to avoid becoming a pawn in their game.
So understanding the system helps you navigate it personally.
That seems to be the source's message. It even includes this very vivid hot take analogy for the documentary's message. It says it's like watching your rich uncle destroy the family business, then still get a bonus, while you're left trying to figure out how to pay rent with monopoly money.
Oof. Yeah, that analogy definitely lands the source's point with impact. Okay, changing pace again. The source throws in something kind of surprising under Wealth Whiz. Did you know?
Yeah, get ready for this one. The source drops this fact. A dog's Instagram account can make $17,500 a post.
Wait, what? A dog earning that much for one post?
Apparently so. The example given is just Pom, a Pomeranian.
That's wild. Okay, so what's the point the source is making with this? What's the takeaway supposed to be?
Well, the source uses this pretty extreme example to illustrate something broader about making money today. It says it shows how creativity, consistency, and a unique personal brand, human or pet, can turn into a profitable venture.
Ah, okay. So the lesson isn't get a famous dog.
Probably not the easiest path. No, the insight drawn is more about the power of building an audience, building a brand, and nurturing it. That consistency, that uniqueness, that's what can create unexpected opportunities, whether you're selling a product, service, or, well, cute dog pictures.
Got it. So from high finance critique to highly paid pets, this source really does jump around. The final kind of distinct section is called Wealth Potpourri Wildcard, and it's about the author's own Forex experiment.
Yes, and the author is pretty upfront here. They say they're not big on Forex trading. They find stocks more intuitive, maybe.
How do they put it?
Their analogy is that buying stocks feels like believing in companies. But Forex trading feels a bit like trying to predict which way the wind is blowing.
Yeah.
So clearly not starting from a place of deep enthusiasm for Forex itself.
But they tried it anyway.
They did. They decided to give copy trading a shot with a small portfolio. They joined some kind of community and opened 3 accounts with $100 each.
Copy trading. So basically mirroring what other presumably more experienced traders were doing.
That's the idea, yeah. Automatically copying their trades.
And what was their method for this little experiment? How did they manage it, according to the source?
It was pretty simple and focused on risk. They state, each time an account hit more than $100, they withdrew the profits.
Okay, so small amounts in, take profits out quickly. How did that work out for them? What did the author say happened?
According to the article, within 3 months, they got back their initial capital and the profits just kept coming.
Wow, initial money back in 3 months is pretty fast. Did they seem confident this would just keep going forever?
No, there's a definite note of caution. The author explicitly adds they are also ready if the accounts decide to crash. So they're framing it very much as an experiment, acknowledging the risk, not presenting it as some kind of guaranteed win.
Right. And crucially, what lessons did the author themselves draw from doing this? What did the source list as the takeaways?
Okay. The source lists 3 specific lessons the author took from this Forex copy trading trial. First, sometimes the best way to learn is to follow the pros, kind of learning by watching, or in this case, copying.
Makes sense.
Second, don't be afraid to try something new, just make sure you're comfortable. So balancing curiosity with your own risk tolerance.
Important balance.
And third, start with a small amount and withdraw profits consistently to reduce risk when you're experimenting. Really practical risk management advice there.
Yeah, those lessons feel like they apply way beyond just Forex, don't they? Learning from others, knowing your comfort zone, testing things safely.
Absolutely. They really tie back well to the source's overall concluding thoughts, which are under the heading, "Take this with you."
Which brings us neatly to the end. What's the final message the source wants to leave the reader or listener with?
It really doubles down on the idea that building wealth isn't about avoiding challenges. It's about embracing growth, even when it feels uncomfortable. It circles back to that theme of needing to step outside your comfort zone.
Especially with things like fear or trying something totally new like that Forex experiment.
Exactly. The source reinforces that it's not supposed to be, effortless, but the effort is worthwhile. It restates that each step you take brings you closer to your financial goals, mentioning all those areas we covered: the fear, the spending, debt, side gigs, new investments.
In the final push.
The final push is basically keep at it. Every bit of effort pays off over time.
Well, we've definitely covered a lot of ground just within this one source, tackling the psychology of investing, practical spending habits, looking at debt differently, generating new income streams, whether from hobbies or famous pets.
Right, exploring alternative investments like real estate crowdfunding, thinking about the big systemic picture via that documentary summary, and even learning from a personal trading experiment.
It really does show how, according to this source at least, improving your financial situation involves coming at it from lots of different angles.
Yeah, using different tools, different perspectives, sometimes learning from places you wouldn't expect.
Definitely. Going through the specific material really highlights that multifaceted approach. Okay, so as a final thought for you, the listener, to chew on something drawn straight from the material we've just explored, how do those big systemic issues brought up in the Inside Job part of the source? That idea of powerful players maybe manipulating things, how does that connect with or maybe change how you think about the very personal strategies discussed elsewhere in the article?
Like, does understanding the wider system potentially alter how you approach your own finances? Your fear, your spending, your side hustle
It's
ideas?
exactly something to think about.
Definitely food for thought.
Indeed. And that wraps up this deep dive.